I cannot believe that I'm saying these words. At last, we have a bullish weekly Web3 digest. Since I started these digests, everything looks not so great. The market hasn't been good this year, and yeah, it's been tough. But the last week, we have picked up massively. There's been some really cool stuff going on in the market. And although I try to keep the digest bullish, looking at the positivities of how the industry is still growing, regardless to markets and prices, I actually get to talk about everything being bullish right now. So yeah, this is going to be an exciting Web3 digest, and hopefully it gives you an insight into what might be around the corner for the crypto industry, what is next. So let's get into it. So first up, we have Bitcoin surpassing $100,000. Who would have thought 10 years ago that this little digital thing that was created that many called a scam would be worth $100,000 per coin and have a ridiculous market capitalization, one of the biggest in the world? And what really fueled this kind of push over the line was Trump doing a trade deal with the UK, funnily enough. And I think it's a sign that Trump's tariff plans, this 90-day extension, is to get individual deals in place with different countries. So in the coming weeks, if it's, oh, we now have a deal with this country and this country and this country, it's going to be super bullish on a macro level, which is going to see flows into more risk on assets like Bitcoin. Personal opinion here, I think if the Fed start printing money again at some point later this year to try and hold up the economy and the current pain being felt, then we'll see a flow of this supply into Bitcoin as well, because Bitcoin is now held up almost by institutions. It's $40 billion in institutional inflows into Bitcoin now, which is only growing and getting larger and larger. And it's finite. We can't just go and print more Bitcoin. So it's arguably a lot more valuable than an actual currency like the dollar, which can, of course, just be printed and created out of thin air. So yeah, I think it's so exciting for Bitcoin. And I think we could hit some crazy levels this year with everything else going on in the world and everything that Bitcoin has going for it and where it's currently at. Next up, Ethereum. I made a bold personal decision a couple of months ago, which was to start buying Ethereum. And it wasn't looking good because we all know that the layer one landscape is very fierce in competition right now. And Ethereum isn't usable technology. Builders don't come out into a crypto now and say, oh, I'm building on Ethereum. They might deploy a token on Ethereum because of the access and liquidity on the Ethereum network, but they're not going to build a protocol on Ethereum because, of course, it can be very expensive and gas fees can get very high and spike, and it's slower than a lot of other chains as well. So Ethereum wasn't looking good. I mean, a lot of people were saying it's going to be the BlackBerry of blockchains. How obviously Apple came in and just dominated the phone market after BlackBerry kind of paved the way for smartphones. Ethereum this week has made a Pectra update, which has improved the chain. And it's a sign going in the right direction. I think a couple of weeks ago, they proposed an upgrade of EVM as well to try and solve the problems that they're facing. Ethereum are trying to correct the problems with their chain. And I think this is, again, something that's really bullish if they can make it happen. And even this morning, I'm looking, Ethereum's 40% up in the week. It's now trading around $2,500. It's had a lot of inflows this week from an institutional level as well. And it was actually deflationary at one point in the last week when the update took place, as it just triggered a huge spike in on-chain activity. So maybe the future for Ethereum is looking a little bit more bullish now. And as a holder of Ethereum, I'm obviously happy. It's had such an important role to play in the development of crypto in this ecosystem. If it can make upgrades to perform at least at the level of competing L1s, then it could really do something. More good news. So the US, or depending on who you are, will depend on whether this is good news. But for me and true builders, this is good news. The US have proposed a bill for crypto framework this week, which again is a great sign for how this industry moves forward. There's way too many extractors and illicit projects in this space, and been saying for a long time now that we need solid framework for crypto projects, what you can do, what you can't do, protect consumers, prevent extraction, and let the builders flourish. So yeah, they've proposed this crypto market structure. Obviously the bill still needs to pass, but it's a sign in the right direction that such a big power like the US is trying to get a handle on this industry and give it a framework for it to prosper and grow. Next up, Coinbase have acquired Deribit in a $2.9 billion deal. Deribit is the largest crypto options trading platform. And now they're going to be a part of Coinbase. And what this does is it gives Coinbase control of almost 80% of the crypto options market now. Coinbase can now improve their crypto options trading offering with the infrastructure that they've acquired from Deribit. And the next point here is there's a lot of hype around hype. I watched a podcast between Farouk and CZ the other day, and they were talking about centralized exchanges versus decentralized exchanges and how the future is hopefully going to be very kind of dominant decentralized. And hype is an outstanding example of a disruptor that's come to this market. And anyone who is building in crypto should look at hype as a great example of how to really build a project, from their product to how they handle their token. They are a really, really smart team, and there's a lot to learn from them. So I'm reading here, even in the last week, increased the market cap by 1.3 billion, and they've surged by 90% in the past month, pushing their market cap from 7 billion to 8.3 billion. And something else they've done is they're looking to kind of enhance their USDT support through launching USDT 0. But something else that is very interesting around hype is they are revenue generating, and then they're putting the money into buybacks to buy back hype, which is obviously helping with buying pressure for the token and pushing the token price up. And we all know in growth, in crypto, your token and your chart are two of the greatest growth assets, if not the best growth assets that you have. So making strategic moves like this, giving back to the community, injecting back into creating a healthy market really does cause a network effect in crypto. And we're seeing it here in real life, real time with hype. So that's all for the weekly Web3 Digest this week. Hopefully we'll be back again next week with something even more bullish, gaining good momentum. How long it's going to last? Who knows? A lot of people think it's going to be slow over summer and then pick up during the end of the year, and we'll have the end of this cycle that we're currently in. Whereas crypto is always surprising. Maybe we just continue seeing inflows into the market all summer long. Wouldn't be surprised. So yeah, stay tuned for your updates with the Magnet Weekly Web3 Digest. See you next time.